Okay, hi there guys. Just let me know if you can hear me loud and clear. Might have my girl, you can probably hear in the background, looking at the computer. Just got my eye on the open at the moment. Alright, let's get started. Can you hear me okay? I'm assuming yep. Alright, welcome to TradeSetup, the overnight overview of just what happened in the action overnight. Not a lot in the stock market last night, which is the US market, which is interesting. It's pretty much flat. I think overall, the US dollar pretty much gave back the gains that put on into the close yesterday. So that's quite interesting. It looks like they're still trying to factor in potential more rate cuts. I think I put in the morning alert this morning. There's still a 50%. Well, the traders are seeing 50% chance of a rate cut in October in the next meeting. So that's interesting. Even after the Fed, what the Fed's saying, I think that to me is still a lot of traders are biased negative against the trade war and tariffs. So our US and China had a few talks last night, I think lower level meetings, and they're trying to nut a few things out. I think that'll finish tonight. It's a couple of days, I think, talks they've got going, and then trying to set the scene and the tone for the high level talks, in inverted commas, in October, early October. So that had the market sort of, I guess, flat, just contained after a bigger session. The last couple of sessions have been quite big and quite choppy. So buyers were sort of hanging around the sidelines, it looks like, last night. Rather than diving in, it was sort of evenly matched. So we'll have to see how. I think trade war is still a hangover, and it looks like if there's a 50% chance, if they're talking up a 50% chance on another rate cut in October, after the Fed has already said, we're just going to stand aside for now and we're going to wait for the data. It looks like they're expecting the trade war to kick off, the pressure to be on, and another sort of, I guess another word, convenient rate cut for Trump. So we'll see what happens. We'll just go over to the SPY now. We're expecting up about 10 or 15 points on the SPY. So we'll just see where it opens. So 10 or 15 point open up on the index. So we had a fairly good open yesterday, powerful open, which I feel it caught a lot of people off guard. That really big pop, didn't expect that on the open. Expected a few points, pop on the open, then you see the SPY starting to lift on the open. You think, hang on a sec, here we go. The ASX is going to lift it's going to be quite strong on the open, and it did, but then it sort of just drifted low. You got a bit of a sell-off here, back down to 6,700 from 6,330. Good 30-point drop. And then it sort of bounced back up into the close. Held on to some gains, but it gave up, give or take half of the gains during the session. It just drifted lower. So wait and see how it opens. Let's just go over to the SPY, which is probably open now. And that's not it. There you go. So expecting this to potentially hold as a higher low, and to see if we get another push up on the open, clean out a few of these, really dragging a few buys, retail buys, drag them into the action as the ASX heads higher, and it could be a bit of a rinse into the close again. Potentially like what happened yesterday. Market opens really strong and they sell into it and just sort of edge out of some shares. Who knows? I mean, we really don't, just got to anticipate what's happening, but the market is overall looking quite strong. Back to the ASX, let's go to the daily. That is trending higher. I don't like the fact that the stochastics are up here. Let's just go something else. The momentum's positive. It is looking a bit stretched, but when you've got a trending market, they can stay stretched for quite a while. Look, it was stretched here, minor pullback, good heat come out, but they're holding highs. Through here, it was staying sort of in the overbought territory and kept grinding higher. So we could just keep grinding higher up to the all-time highs again before some sort of pullback, or we may have a bit of a reset somewhere here for a drive up, or we could just sell off. I mean, from here, nothing is showing up clear. It's just trying to assess the overall, situation to try to figure out what is potential outcomes, and trading around that really. Let's just see what the, just want to see what this 5-minute chart's doing. All right, so forget about this actually. So this is the 4 o'clock close. You can see the market powered higher and then just drifted into the close yesterday. And it's overnight held this inside level at 67.07. So I'm expecting that to hold up today. I'm expecting probably very shortly that 67.42 to be tested. It's only 10 points away, at least a washout, and then we'll have to assess. It's just going to blast through like that and hold this is as a high low around 67.22. Or what are we going to get? Some sort of reaction low, be coming into the weekend, all that sort of stuff. So trades, I might as well go over a trade from yesterday. So we've discussed this a bit, the inside out, outside in trades. You either got momentum from the inside out, and that's on the downside and the upside. So you're looking for something like this, for instance. Actually was looking at this, even though it was setting up long, you've got the momentum, which is actually below zero. It's been trending lower, both on that, and if you go over to the 30-minute chart, you can see here, the momentum was still, it was trending lower and is getting sort of around that zero line. So the momentum was coming off. So I was actually looking at this, a bit of a setup when it's popped through these highs as more of a short than anything else. And it's more of that sort of inside out. You're sort of going from the mean or the average to the outside, the extremes. Didn't take that. Of course, I didn't take that. But I did take this short in here. Again, it was just one of those trades that pushed up, got to the extremes, and we're looking for that sort of ease off in momentum. And it started, momentum was still ticking up here, still kicked up strong, and we're looking for that. We've discussed a few times that M pattern, and by M pattern I mean, let's just look at that. Your market's popped up. Well, that's not going to be very good, is it? Let's just get rid of that. Let's just do this. So the M pattern's more like, okay, the pullback, pop back up, and that's what you're looking for. Sort of on those extremes. So that's what I'm looking for anyway. You've got that push up, red candle. So that's the first sort of serious red candle, apart from that, just on the open. First serious red candle after the open, and the market's potentially coming off here. You can see here the momentum's coming down by the time you're hitting the second sort of M, the end of the head, the edge of the M pattern, if that makes sense. And then we're just looking to really take a short on the break of the candle, the red candle, that green candle there, with the wrist just above. All turned out nicely. It did consolidate here, and I got chipped out for about 8 points, 9 points, something like that. But all in all, that was, we expected it to happen. Reversion back to the mean. So when it falls back there and it gets back to the sort of the average or the mean level, you want to be cautious. Sometimes you just get it breaking straight through to the other side. That's fine. But if you don't, just look for some sort of stalling or buying starting to step in. And it did, so we just took that off. And then we got, the only other trade that I saw clearly was pretty much that sell in here. This, you could argue is a bit of a reversion to the mean, but I didn't really, you don't see any momentum slowing just at that stage before it started taking off. And you don't really see any sort of M pattern, which I like to sit on those M patterns quite a bit. So that was it for yesterday. We'll see how we go today, whether we get, this pushes up and we get some sort of extreme scenario again, where we can, get rid of that. We get some sort of extreme scenario where we can sit on an M pattern and get a reversion to the mean, and whether we get a push to the other side by the end of the day, that would be awesome. Otherwise, we might be looking for, if it just pulls back from here and can start to consolidate and build a higher low, ideally that's what you would want for it. That was really horrible, wasn't it? We want something like that. Okay. So that's what I'm looking at today. I don't think I'll be too hard into it today. I mean, if this market keeps chipping higher, I think we're more on the cards for a bit of a reversion to the mean style trading, from the extreme, and just see how it goes. All right, what else we got? So let's just take a look at the pound. Pound looking good for continuation up. It probably needs to sit on top of these MAs a bit more. You probably find that you've got something like a pop-up like this. It spends most of the Asian session and coming into the European session consolidating. It's a 1 hour chart, a few candles sitting around here, and if it can start to lift and take out that high, it could just start to get extended. You might be a little trading out on the long side. It is longer term. You've got, let's just have a look at this. You've got some key support down here, and you've got sort of these minor levels holding up on the inside. So these two, if you start to drift down and retesting this lower level at around, say, 124.42, still a bit of a way off. That's, well, a way off. It's nearly 100 pips, 75 pips away. You'd want to be careful on going long just off that level. I'm not a big fan of, you got this test, made a new high, come all the way back down, because you're looking for this. Ideally, this is the leg up. You want say 30 to 60% retracement. The higher, or the lower the retracement, say 30%, the stronger that move, and the higher likelihood that it's going to be continuation up. When you get a deeper correction, it means that more sellers are coming in, so there's more people who bought it up in this, giving up the ghost and just giving up the trade and going back on the sidelines, and you don't necessarily want to see that. So, but it can, there's times when you could say we could pick this inside level, it can come back down, retest, hold a higher low, and away you go. That's fine. But ideally, for something on here, I wouldn't mind seeing a secondary washout and then seeing if it can pop up, hold a higher level, and then just pop up like that, or something like that anyway. Like it did here, you've got this contraction, held this secondary level here, retested the prior levels, or the lows, and then held this inside. You can see this inside before it took off. So ideally, that was your prime entry there. Well, what we'd suggest would be a prime entry. All right, something like that with your risk just below. So that's what I'll be looking for today on the pound. I think the euro is a little bit more messy for me. I don't like that too much. You've got, so this overhead resistance, and it's starting to creep down a bit. So I think they've got more issues with weakness in the euro than strength. Weakness persisting. The only thing that's probably going to happen is a bit of a cave in on the US dollar, but the US dollar's oscillating too much. It's bouncing between gains and losses. There's that potential rate cuts. And further rate cuts is putting pressure on the dollar, and then it bounces back on some positive news out in the economy, meaning there's not going to be a rate cut, and all of a sudden you get this bit of a bounce back into the dollar as the shorts close out. So it's still, this moving around and issues to be worried about with the US dollar. So I'm not too keen on that. Whereas, Brexit, the pound is supported by a positive Brexit, or a deal, a good deal into Brexit, which might mean that it just keeps rallying and there is potential. I'm not sure for a bigger short squeeze anyway. So you've got shorts that built up here. A few of them have been squeezed out, but there's going to be longer term ones that could put pressure on and really drive higher. The Aussie, after all that, it's probably not a bad short right here, potentially. What I was looking for on the Aussie coming into the open, I probably wouldn't take this. So you've got, let's just mark up the levels, what I'll be looking for. So you've got this low down here. You're looking for a lower high like we saw here, potential lower high in here. This we were looking at as a potential lower high. So when you get the lower high, and what you've got, you can see in here, that's your contraction back up. So that's your pullback, or your reversion to the mean, or you're coming back to the MAs, and then from there, all I'm really looking for is if we can break down, like we have here, where you break down. I'd rather see a deeper pullback and something like that. But it looks like there is potential we're just going to go straight down. So this type of move off this really minor lower high, I'm sort of looking at that as potentially we're going to flush this level on the lows, because on the downside, we're getting a bit stretched. Okay, we're looking a bit stretched here, and we were talking about a short up here, got a good little short in play, got bought back up, retested that level, that same level around 68.70, say, and then sold off, and you got this lower high, and then the market really started to kick in, or the shorts really started to kick in and pressure that market lower. So that was great, and that's, this, you can see the power of this move. It's really got smashed down the lows. So for me, it's starting to say the odds are starting to swing from selling to buying, potentially. I'm not saying it is, but you've got to be careful with further shorts. Look at the market starting to get a bit stretched on the downside here. So we could just see a bit of a flush of these, even a flush of this level before we build a key lower high. But I'd ideally like to see that pop up below this 68.08 zone and hold some sort of lower high action like that. And then I think that could be what could take us easily straight through the support and really extend those lows and start to get a bit of a run on. But all in all, let me just see what, this is all part of that big move. So it's whether or not, now I'm always generally looking for, that's your first move down, good pullback, deep pullback, 50% of that move down before we get the secondary leg. Now, because we've had that secondary leg, well, potentially had that secondary leg, that's why there is getting a bit of a chance where this could hold up. All being said, I mean, it could just go screaming through. We don't know that yet. But this action is a bit different to the buying off this, just went straight up with minor higher lows, whereas we've had quite a bit of chop here. All right, so that's all I'm looking at in the Aussie. So we'll just gold. Yeah, good to see. Want to see gold hold up around that, say, 1497 and start to lift. If we can get up through this level at 1501, this is on the CFD. I don't know what the futures will be. Say 1511, 10, 12, 13, something like that. If we can get up above this level, this inside lower high, then I think that could be good. Do something like this and just power on and up to back up to these highs, which would be good for our little goldies. But that's either way. That support has been holding. Held way back here, which you'll see once it loads. There you go. Held back in here after the spike, big washout. Buy supported in. It's come back down, retest. We've got buy supporting. So there's still, there's still a safe haven reason, I'd say, to buy gold. Nothing's really worked its way out, like we were saying yesterday, between Trump and the Fed or Powell. The ball's in Trump's court now. If he doesn't sort out these trade deals and the headwinds continue, then you'd probably expect gold to be buoyant. Now, until if the trade war gets sorted out in the next few days, bang, gold will probably more than likely get smacked, because that's the major headwind to global growth, and there's no need for a hedge into gold anymore. But we'll see. Until that gets sorted out, which I don't think it's, what we said before, 50% chance of another rate cut. That's what they're banking on. In essence, they're saying that the trade war is probably going to continue because the economy's going okay. Powell's cut his rates. The data's showing, jobs are secure, low unemployment. They're still putting on jobs. That's all great. Inflation's within their range. So there's no reason to cut it on the numbers. Yet the market still believes in another 50% chance that it's going to be a cut, which is suggesting by October we're going to get some sort of issues with trade, the trade war, and that's going to that could intensify. And if that's the case, then you'd expect gold just to kick off. We're still in that liquidity zone we've been mentioning the last few days. Nothing much has changed there. It's popped up. We could come under pressure in the Asian session now. The Dow, a bit of a squeeze out on the longs built up. S&P pretty much the same, and that's your DAX. I mean, that's still, overall, that's looking buoyant, and as long as it can hold a high low here. If it can sort of hold around this zone, we just marked up, that's your previous lower high. It's pushed through, come back, so there could be some liquidity to be had in here, and we start to push up and take out these highs. If that's the case, great. It's a long market, bias long. If not, I have to wait and see, but I think there's still a bit of issues around anyway. Just see what the SPY's doing before we finish up. Still hovering around those highs. Yeah, so it's pushed down and rejected. Just keep an eye on this. I wouldn't be shorting that now. I mean, I'm not going to be shorting it before, say 10:15 once the market's fully open. And this could be a bit of what we saw. Where was it? Back here. Look, it's sort of, you get that initial spike lower. Shorts come in and then it powers on again and cleans them all out again. So it could be in the stage of really washing out the 67.42. So we'll just watch that. We'll see where the open is anyway. Up 11, so we said 10 to 15. It's already there now. We're probably going to open up towards the 20 mark. So there could be a bit of buoyancy on the open. All right, guys, we'll probably leave it there. We'll call it a day. Thanks for joining me. If you have any questions, feel free to send through an email to support@tradesetup.com.au. If you like what you hear, it'd be great if you could leave us a like on YouTube and spread the word or spread the love. Now, guys, have a good day and have a great weekend too. We're back in Monday morning. Let's just hope nothing untoward happens tonight in the US and we got all weekend to stew over it. Anyway, have a great day, great weekend. I'll speak to you soon. Bye.